Okay, we're getting there. 3, 2, 1. Live. How you doing, folks? It's Ernie here with another fantastic moment where we're going to talk more about trading Bitcoin. Today, we're going to talk about trading Bitcoin using Kraken. As far as I know, Kraken is the only U.S. regulated exchange that has margin, allowing you to do leverage and selling short with leverage. So unfortunately, that means that we have limited choices. That's something that we're not used to here in the United States. I feel like somehow we are second-class citizens. And so Kraken is the only alternative. I've been trading with Kraken now for about a couple of weeks, something like that. And maybe 2.5 weeks. Almost since we opened up our Bitcoin PatternCast service. And so I'm here to kind of report on that and what it's all about. I think what I did was I did the KYC and all the other identification stuff prior to going on my vacation down at the vineyard. So I guess that would be about 3 weeks, almost 4 weeks ago that I signed up for Kraken. Didn't start really using it until the past 2.5 weeks or so. But in that time frame, I've logged a number of trades, and I didn't really have a full understanding of Kraken and the fees associated with it when I started out. I understood limit orders and market orders, and I understood, at least from a basic sense, the idea of a taker or a maker fee, and that generally what you want to do is you want to do limit orders and put your order on the right side of market price in order to take advantage of a maker fee as opposed to a taker fee. Apparently I somehow screwed that up. I'm not sure exactly how, but several times I was on the side of a taker fee. And I'm really not aware of how that possibly could happen, because I really thought that I was, when I was setting to buy, I would set my price below the market price and allow it to come down to it. And when I wanted to sell, I would set it above and let it come up to that. But according to the Kraken representative, or whoever the support person is that I complained about the cost of the fees, they said, no, you were doing it the other way. And I'm like, man, could I be that stupid? I mean, it's possible. It's very possible I'm that stupid. But I don't know. I really don't know. Maybe I don't know. There are so many things that I do around the house here. And the wife says, why'd you do it that way? I said, well, I didn't do it that way. I did it this way. So who the hell knows? Maybe I'm living in an alternate universe. But in any event, that is something that you need to take very close note of if you want to make sure that you minimize your fees on Kraken, and to make sure that you're doing maker fees so that the maker fees are significantly less than the taker fees. The other thing that will affect your cost of trade is the overall volume that you do in 1 month's time, and that's very clearly shown on the Kraken interface. And they have levels where you get above a certain level. I think it's once you get above $100,000 of total notional value in a 30-day period, then you go down to the next level. And it's a fairly significant drop. It's about 20% discount. And then you go to the next level and you get another drop, and then another drop, until you're trading huge, and you're practically paying you're paying very little fee. So they reward you for trading more or trading bigger, and so that's an important thing. The other thing that they reward you for is being in a trade for as little time as possible. I mean, this is really, and what they do is they put a time limit. So for every 4 hours, they charge a fee of 0.01% of whatever amount of money that you have in play. And if you have it in for 10 hours, then you're going to get charged twice. If you have it in for 12 hours, then you're going to get charged 3 times. And they add 0.01% onto your fee. And that can add up. Particularly if you want to, hold a position for a bit, it's going to cost you. So that seems like right in line with the broker narrative of traditional brokers that are trying to get you to trade more. And the reason why they put that fee on, that penalty for holding on to a trade for a while, is that it costs them money to hold that trade for a while. And they would prefer that you do quick trades and more of them because they make a lot more money on the actual entry and exit fees than they do on the time-based fee. So you got that. So there's another fee. There's an opening fee. There's a rollover fee. So every time that you go from, 1 4-hour period to the next, on top of being, on top of getting the 0.01%, you get another fee on top of that. So you just get feed to death. And what I found was that the return on capital used was not bad. I mean, my return on capital has a lot to do with the efficacy and fantastic edge that you get with PatternCast, but I was able to achieve about a 20 to 22% return on equity, and that's pretty darn good. I think I could do better. I think I could do 30, maybe even 40% if I had a handle on how these fees go, and if I can also increase my total volume per month. Maybe I can get up to 30, 35% return on capital. Maybe I can, limit my trades or certain types of trades or margin trades to certain signals that we get from PatternCast that are looking for very long or quick drops or quick rises, or I don't know. I don't want to sit here and try to speculate on what the future is going to be for any signal that I take. I think the best way to treat this is you're probably better off staying in a trade for a little longer than making more trades. So one thing that this doesn't encourage is the idea of scaling in and scaling out of a trade. Scaling in and scaling out of a trade is an extremely costly thing to do. Very costly. So you should have a very good idea of when you get into that trade, where you want to get in, how much for, and for what price. Excuse me. and what price you want to pay. And forget all the scaling in, scaling out. Of course, that depends on how big your account is, how much volume you're doing, and a number of other things, whether or not that would make sense. I mean, I can see adding to a trade if it really made a lot of sense. But you do that to any kind of excess, and the fees really start piling up. So that's a consideration. What I'm thinking is that, and I know that if you go to a non-U.S., non-regulated exchange, a lot of these fees are significantly less. In some cases, they're not significantly less, but in some cases they are. So you can save some money by going outside the U.S. Of course, the only way that they'll allow you to do that is if you sign up with some of these exchanges using a VPN and pretend that you're somewhere else. which is tantamount to lying about who you are and where you're from. And so I'm not really interested in that, and also for the reason that I'm not interested in working with an exchange that is not regulated. And this might sound weird to some people that are not in the U.S. that, hey, this is the way we live, and we live by the seat of our pants. I don't want to do that. I like the safety of a regulated exchange. And this also may sound contradictory to the whole idea of cryptocurrencies and being free from the man and third-party institutions. I mean, where is the truly decentralized exchange? And that would be good. But that's not the reality right now. There aren't any really good decentralized exchanges out there that I'm aware of. So what I'm thinking here is that a better way, I mean, Kraken is what I have. So I'm going to use Kraken. I'm going to use Kraken to try to build my account, keep on building, keep on building, keep on building. And some people will say, well, why don't you do futures, like the CME futures? Now, CME futures are simply, I mean, with the size of the account that I'm starting with, and I'm doing this for a reason. I'm using this size of account so I can demonstrate to other people that have smaller accounts, under $10,000 accounts that can come in and trade this and make money. And you certainly can do that, particularly with PatternCast. I mean, you can definitely make some good money, and I have been making some good money. And in just a short period of time, I've increased my account by about 12% or so in 2.5 weeks. So that's not bad. If I extend that over a long period, regulated exchange would be a far better way to go for a number of reasons. One is you're in a regulated environment. Your fees are much, much lower. You have far more leverage. Well, actually, you don't have far more leverage because CME futures, which are very expensive, require you to have at least $30,000 in your account just to trade one contract. But however, when backed futures come online, they'll have day and monthly expiry futures based on one Bitcoin. I expect the fees to be much, much less in order to use those, probably on the order of $4,000 or $5,000 in your account to command one or control one contract. So I'll probably, once they come online and I've increased my account to 6,000-7,000, I'll put that money into futures and then trade Bitcoin off of the PatternCast signals that way. But continue to use Kraken so that I can develop that experience with it and help people that are just coming on with small accounts. But if you're a U.S. customer, I think that first of all, I mean, you could certainly just trade, buy and sell Bitcoin, going in and out of your favorite fiat on something like Coinbase or something, and that would be okay. But you're not going to get the advantage of leverage. And shorting isn't something that you're not really shorting. So, from that perspective, Kraken is really the only game in town. So that's pretty much it. Is it a great experience? For someone who has experience in the market, it's still a learning experience dealing with Kraken because first of all, the interface is uninspiring. For someone who has experience, though, it's not that hard to figure out. For someone who doesn't have experience, they're going to need a little hand-holding. So Kraken's okay from that point of view. It's a relatively lengthy procedure for getting yourself up to an intermediate level in terms of the KYC, know your customer, where you have to provide the certain types of documentation, including photo IDs and bills, like an electric bill proving where you live and all this other stuff. And going through that, there was some glitches there in terms of how you actually take the picture, and that was kind of little weird. But I understood it all, and it all worked out okay. And I'm in it now, and I'm kind of living with it. And after a while, when you live with a bad partner, you get used to their idiosyncrasies, and then you start seeing maybe some of the good in that partner. And I guess the only good I'm really seeing is the fact that I can do some leverage shorts and use relatively small amounts of my capital at that short. Now, Bitcoin seems to be one of the cheapest alternatives in terms of cryptos to trade through Kraken. Most of the fees on other alts are higher. So I'm not really interested in trading those, particularly because I don't have what I consider an edge. With Bitcoin and PatternCast, I have a friggin' edge. And so that's really the game changer here. Now, if someone's sitting outside of the US and they have access to all these other exchanges with much less costs, then I would say that you're probably in a really good place. Particularly with something like PatternCast, that's going to give you an edge, and you have relatively low fees. You can make a killing trading Bitcoin. And I think that once I start moving on to other exchanges, particularly with futures and the backed futures, it's going to kind of open up for me. I'll be able to probably turn over, a half Bitcoin into a Bitcoin every month. I don't see that being difficult at all, considering that, since we've put trades out there, since we've put signals out there, we're running on about a 95% win rate. So that's cool. So that's my overall view of Kraken. If you're coming into PatternCast and you require some help there, you're going to require probably a little bit of hand holding if you're using Kraken with PatternCast. I'm here. I can provide that assistance for you and share my experience. Some people have told me they've been with it for years, and they've developed kind of a hardness towards it and sort of accepted the idiosyncrasies and what appear to be kind of fees out of nowhere. And I think a lot of that has to do with just not really paying attention to where your limit order is, where the market price is, where you're setting it, and so forth, how long you're holding on to it. Sadly, you have to keep track of that. I mean, if you didn't have to keep track of that, and worry about the rollover fees. Although I would say that I wouldn't worry so much about the 4-hour fee and the rollover fee, because they are inconsequential compared to the overall entry and exit fees, and also the difference between a maker and a taker fee. And then, of course, if you get to a large enough volume, you can bring those fees down significantly. So that's really the strategy. If you can, get to a $10,000 account as soon as you can, so that you can put in the kind of volume. Maybe you can put in $100,000, $200,000, $250,000 worth of volume or more a month, and then you can start bringing those fees way, way down, and that will make a big difference, I think, in how you perceive the platform and the return that you're getting on your capital. So that is my best suggestion. If you're already sitting here with a $50,000 or $100,000 account, it shouldn't be a problem at all. You can get up into the highest fee structure, or the highest discount of the fee structure that they offer, and I'm sure that would be a great experience. And particularly with PatternCast. I keep on bringing up PatternCast. Why? Because it's my product, it's my service, and it is awesome. If you want to get into PatternCast, click below. Use the coupon code CRYPTO for a yearly pass to get a significant discount. We also take crypto as payment. That's my ad for this video. Let's see. Let's see if anybody has anything to say in the peanut gallery. Have I read about the Binance futures? Binance is not a U.S. exchange, is it? Or does it give me futures in a U.S. regulated exchange? That's what I'd want to know. All Eyes trades on BitMEX with 12.5 leverage. I understand that. Again, not a U.S. exchange. Bullish Beer, there's no point in using BitMEX anymore. Bybit is far better platform with plenty of liquidity. Again, not a U.S. exchange. Now, I'm not. I will try some of the non-U.S. exchanges, but I'm not crazy about it. I've been a futures trader for many, many years, and I like the security, the comfort of, and the consistency of a regulated exchange. It's not to say that some of these other exchanges don't have a lot of those characteristics. It's just that they don't have the guarantee behind it as well. So Binance has their own futures. So Ernie, what is your takeaway with the book in theory, Fooled by Randomness? What do you mainly take away, and how do you apply it into your outlooks on your day-to-day life? That is going to be a subject that I will address actually very soon in separate videos that I'm going to start producing, shorter videos that won't be live. So just here's another announcement that, over the next couple of weeks, I'm making a transition from the live streams to only maybe one live, every day, to maybe one a week, and then start producing the shorter videos again like I used to. And I plan on addressing the Nassim Taleb quadrangle of books, Fooled by Randomness being one of them, Black Swan, Anti-Fragile, and Skin in the Game. So I will address that. Ernie, have you considered doing a trial for your PatternCast? No. There's no reason why I would even ever consider a trial for the PatternCast. If you want to try it, try a monthly version of it, $119. The service is just too valuable to do a trial. I mean, it's crazy. If it doesn't work out for you, I'll give you $119 back. How's that? But I know you'll want it, and then you'll end up buying the yearly after that. But a trial, that's for schmucks. Bullish Bear, I bought it. It's the real deal, says Sean Ehrenbeck. Thank you, Sean. It's kind of scary sometimes how the market moves after a signal comes out. Still refund if we pay an LTC? Yeah, any kind of crypto, I will give an additional $200 off besides the coupon code of crypto for any kind of cryptocurrency that you use to pay for the yearly service. Would you prefer only U.S. exchange? Just curious. It doesn't matter to me. Anything I get in crypto, we usually put it into our trading accounts anyway. So Chuck says, I mostly play short signals on Kraken and play most long signals on Robinhood for the zero fees. That's a good idea. But I could also do that, play the long using, say, Coinbase Pro, right? I would really like to hear your understanding of how to apply. Okay, you already said that. All right. I get it, All Eyes. You really want to hear about Fooled by Randomness. Fooled by Randomness is a fantastic book. How would you apply it to daily life? That's a good question. I will definitely get into that sort of thing in my my video. But it is really what it says, how we can be fooled by statistics and things that kind of just fool our eyes because of our human nature. And Nassim Taleb does a fantastic job. It's one of the, like I said, one of the 4 quadrangle books, 4 seminal pieces of work that every trader should read. And they are presented in the form of a allegory, short stories. and with the sort of repeating characters throughout. Nassim Taleb. Awesome, awesome books. What do you think of MacD? You're an ass. You just want me to yell at you. All right. That's all I've got to say for today. I want to thank you very much. Again, we're on about a 95% win rate streak with PatternCast since it's been introduced. PatternCast for Bitcoin. Our win rate is not actually too far behind it on the traditional markets on the other PatternCast where we do futures, forex, and stocks. So if you want to look at that. We also have the option of a lifetime membership where you pay us one big fee and you get both PatternCast. You get the crypto side and you get the traditional market side and access to both of our world-class trade rooms. So you might want to consider that as well. And I will take crypto for that. All right. I want to thank everybody for coming here. Please go down, click the like button right now. Get down there, click that like, smash it, and share this video out in your social media. Really appreciate you coming out here, and we'll see you next time. Take care. See you next video.